With every decline, there's an incline. With every down, there is a up. So guess what, ladies and gentlemen? There's always a benefit when you're looking at anything that's going on in the economy. Y'all already know I'm a very optimistic person. With these interest rates rising, the 30-year conventional loan is at 7%, when just 2 years ago it was at maybe 2 or 3%. These interest rates are going crazy because inflation is going crazy. The Federal Reserve is trying to knock down these interest rates. But I always ask myself, how is there a way to win in every situation? And then, ladies and gentlemen, in this episode, I'm going to show you how some real estate investors are taking advantage of rising inflation rates. But if you haven't done so already, ladies and gentlemen, boys and girls, y'all know what time it is. Please go ahead and make sure.
Hit the subscribe button, hit the bell icon, hit that like, comment, and share button.
Once again, ladies and gentlemen, boys and girls, and children of all ages, you're now tuned into the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from this beautiful city and state of Denver, Colorado. Don't forget, hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time. So the only thing I love to do is to go ahead and jump straight into it. So right here, Prince, are you crazy? Rising interest rates are bad for everybody. We're seeing the housing market start. Homes are starting to, housing prices are cooling off. Goodness gracious, tongue twister. Also, you're seeing the stock market cool off. So, what do you mean? What are these interest rates are doing? Gas prices are going crazy. What are you talking about? Okay, so what I have pulled up in front of me is from the last Federal Reserve meeting, and from the last Federal Reserve meeting, they're talking about what their projections. This is their assumptions, right, in September on their monetary policies. As you can see and look on 2022, at the end of 2022, they're expecting the Fed fund interest rate to be at 4.4%. Now you go into 2023, they're telling you we're expecting interest rates to go on up again, keep continuing on up, getting right below 5%, right? But guess what they're looking at in 2024? They're looking at in 2024 interest rates starting to drop below 4%. 25, they're dropping below 3%. And in in the long run, they want to have interest rates right about 2.53%. So they're telling you in the short run, interest rates will go up 4.4% by the end of this year. We're probably going to be touching that 5% by next year. But after that, in 2024, you're going to start to see interest rates starting to go down. Now, Prince, what does this mean? Okay, good. You just read a Federal Reserve interest rate report on their projections. Now, how can you use these projections to your advantage? You notice what happened in real estate. I mean, man, houses are just doubling. I purchased my home, and, homes are supposed to go up 40, 50% a year. I mean, they're just doubling. Boom, 20% here, 30% or whatever. But as soon as these interest rates started to come out and started to rise, guess what? You start to see the prices of houses starting to decrease. The prices of houses are starting to decrease or starting to label off, which is good if you're a buyer. If you're a buyer, you're going into the market, okay, the prices are starting to decrease, but the downside is the interest rates are high, so my mortgage is higher. For prime example, a $600,000 house at 3% versus 6% is thousands of dollars per month mortgage. So guess what? The prices of the houses are starting to level out. Some are starting to come down, but the disadvantage to that is the mortgage is higher because the interest rate is higher. Now, I'm telling you all of this because guess what? Let's say if I go out there right now and lock in a house that's $600,000 at a 6% interest rate. Woo, that's going to be a nice little pretty mortgage, right? But guess what? Now I'm anticipating in 2024, I can refinance and go down from 6% maybe to 5%. Then in 2025, as interest rates continue to go down, I could refinance and maybe get up 4%. And in as interest rates continue to decline after 2024, like you're seeing the Federal Reserve start to is projecting, when interest rates starting to decline, hopefully the mortgage rate would decline and you can refinance and refinance and refinance. And maybe that 6% that you once had, you're now getting in for 3%. And what happens when interest rates go down? What did we just see happen in the pandemic when interest rates drop? When interest rates are dropping, I'm refinancing, and the value of not the value, but the price of my home goes up. So now you look at the 5-year run, I'm making refinance and have a 3% interest rate drop from 6% down to 3%. And in my home that I purchased for 600, maybe worth 800 or 900, right? So even in this time right here, real estate investors could use this opportunity to say, hey, now that interest rates are going up and when they peak, I can get homes for good prices, not good interest rates, but get good prices. And then I can renegotiate interest rates as they turn around and start to fall and drop. You guys and girls see that? So there's an advantage in everything. Even with rising and high interest rates, there's a way for an investor to look at an opportunity because I'm an opportunist. Everything I see it as an opportunity. Even if it's a losing situation, I learn and I'm going to find a way to win because I'm a winner and I have a winner's mentality. That's what I want you guys and girls to have. I want y'all to tell me, what do y'all think about these interest rates starting to cool off and drop the housing prices because it's taking the buyers out of the market because people can't afford it. Then with these buying a home with high interest rates, but then when the interest rates started to drop, starting to refinance for the lower interest rates. And as interest rates continue to drop, or when they start to drop, the price of homes go up. I'm not saying the value, but the price of homes start to go up just like they did, like we saw when the rates were cut back in 2020 as a stimulus to the pandemic. All right. So let me know what y'all think. That's an advantage right there that some people are looking at this policy that they just put out. The Federal Reserve put this out on their last when they rose interest rates, their monthly meeting, and they rose interest rates by 75 base points. This is something that real estate investors are saying, hey, you know what? I can lock in the price. I'm not trying to lock in the interest rates, but I'm trying to lock in that price and then renegotiate my interest rates as interest rates start to fall off. And interest rates start to fall off, you already know what that's going to do to asset prices. It's going to start to push them up, just like we saw in the pandemic. So y'all let me know what y'all think it is. It's always an advantage, always an opportunity in everything you see. Let me know if I'm crazy or not or whatever, but that's just an opportunity right there. Don't forget to hit that like, subscribe, comment, and share button. And as always, y'all already know my name is Prince Dykes. And y'all check that description box out and make a contribution to my book drive. I'm trying to give away 1,175 books. That's my first milestone, right? So y'all go ahead, y'all help me out, support me, and I would definitely appreciate it. Help a brother out. Come on, stop playing. Until the next video, podcast, cartoon, or whatever else crazy you see me doing around the globe. Peace. Be safe. I'm out, and thank you.